another episode of Fund Launch Live, the daily live stream about all things roll-in funds, syndicates, and other forms of publicly solicitable, publicly marketable equity. So today we're going to be talking about Cheyenne Puri's roll-in fund. Now, if you don't know Cheyenne Puri, he is the co-host of the very popular podcast, My First Million. Right now, in August 16th, 2020, My First Million is on number 26 in the Apple charts for business podcasts. They are very successful. They've had a handful of really interesting guests, including the CEO of AngelList Venture. Also some big celebrity guest names, Jake Paul, who am I thinking of? Sorry, Rob Dyrdek. The Rob Dyrdek episode was extremely interesting. They've had some big names on. Now, I want to talk about Cheyenne Puri's rolling fund. Sean was one of the first people on the AngelList platform. He launched his fund in mid-2020. The rolling fund platform was released in early 2020, and he was one of the first handful on. And his results speak for themselves. He's a great case study in how fast you can fundraise when you already have a network and you plug that into the AngelList Roll-In Fund platform. From 0 to 1.7 million in 96 hours. That's right. 4 days after launching his rolling fund, Sean already had $1.7 million in commits from investors he had never met before. He did not create an email campaign or even make a video. He threw up the landing page for his fund, tweeted it out, and the rest is history. Now, hypothetically speaking, at this moment in 2022, his fund terms are a $12.5K quarterly subscription for a duration of 4 quarters. That is the minimum to get in. That's a minimum of $50K. Now, if we assume that he's kept the same minimum, that means that to get to his for his 1.7 million opening, that was about 34 investors all contributing the minimum. I don't know how many investors he did have in his fund at that point or how many he has now. But if we just calculate the minimum, that's 34 investors. The AngelList platform will let you bring on 99 LPs total. You can have 100 people inside a roll-in fund, and you as a GP are one of them. I'd like to know how many or which roll-in funds have maxed out their LP limit. I think there's a very interesting idea of when you max out the number of LPs you can have, then, and if you still have a line outside the door, then you can begin bidding LP. If you still have deal flow and you need more capital to service it, interesting marketing tactics, sort of, as you could begin bidding LPs against each other. Hey guys, there's only 99 seats at the table. We have 100 more people waiting outside the door to get in. All of you paid $12.5K over 4 quarters to get in. But if you want to stay in for the next, for the future, it's going to be raised to $20K per quarter. Or you can play with the duration. It's going to stay at 12.5, but you're going to have to commit to 6 quarters, perhaps. Now, let's go through the launch page for Sean's fund. And I'm just going to switch our viewing angle a little bit here. Okay. Apply to Sean's All Access Fund. Note from Sean. Our mission is to turn boat money into yacht money. Just kidding. But it's true. We invest money to make more money. My goal with this fund is to quadruple or more our money over the next 10 years. We do that by backing relentless founders going after massive market opportunities. We're lucky to have a privileged position. I've spent the past 10 years building up a huge network of friends in Silicon Valley. Cutting them checks is the easy part. I'm creating my all-access fund so people from all over the world can have access to my deal flow and network. It took me 10 years to build this network, but you can inherit it overnight by co-investing with me. Now, why should you back me? I'm not the most experienced investor. I don't work the hardest, but I'm smart and I have a simple strategy that, if followed, will produce great results. My strategy: 1, don't hunt deals. Build a honeypot that attracts great founders. 2, invest in the right deals. Building a honeypot for great founders. Access is the name of the game investing. To get real returns, you need to see the right deals and find a way into them. Rather than hunting deals, I focus on building honeypots that attract great founders to me. Pull is greater than push. I do this in 4 ways. 1, underground society of founders. For 7 years, I've hosted mastermind meetings with founders in SF. This is how I became friends with the founders of companies like AppLovin, $1 billion plus valuation, Calm, $1 billion plus valuation, Loom, $350 million valuation, Clearbit, $250 million valuation, Zola Electric, $150 million valuation, TinyCo, acquired for $100 million, etc. Having a tight community of badass founders is our true asset. Podcast. I have a startup podcast that does over 2 million downloads a year and was number 55 on the iTunes charts, which brings strong inbound emails from people who want me to help them raise money. Track record. I sold my last startup for 8 figures to Amazon. So founders come to me for advice on the things I specialize in: international growth and fundraising. Co-investment. Number 4. I co-invest and share interesting deals with friends who also have great deal flow. For example, Ryan Hoover from Weekend Fund or Suleiman Ali from Ali Capital. Track record. Asterisks. I've made a handful of investments over the past 2 years that I'm excited about. Let's walk through a few of them. These are the types of deals we will do together. Lambda School, Series A. Lambda School is a disruptive university model. It's a free coding school that gets paid only when you get a high-paying job. Aligned incentives. They have a ton of buzz and have recently raised money at a $150 million valuation. I scouted this investment when they had 80 students. They now have over 2,000 annually. At 10K students per year, they will be a $1 billion or greater company. Voles I, Series B. This is a drone company that delivers critical payloads to remote locations. For example, medical supplies in Africa or machinery replacement parts to remote oil rigs. Volans I is backed by Lightspeed and Y Combinator and is on track to become a unicorn in the next 2 years. Drone delivery is a huge market, and Volans I has a chance to be the category leader. KarmaCheck, seed stage. This is a company that makes background checks faster, simpler, and cheaper for companies with large numbers of workers. Imagine Uber needing to do the background check on every driver. Started by one of the co-founders of LinkedIn. They are early, but doing very well, having crossed the 1 million annual recurring revenue mark already. Nana, seeds investment. Nana has a fleet of on-demand appliance technicians. If your dryer breaks, like mine did, Nana can dispatch a technician to your house to fix it. This is an old-school, fragmented mom-and-pop market that Nana is consolidating the way that Uber did the taxi market. Nana is early, but doing very well so far. I can't share any numbers. They are like Lambda School in that they train/upskill people to learn to repair appliances within months. Technicians can work flexible hours and can earn between $75 and $150K per year. Plus, I have one stealth investment that I can't talk about. We will be reserving up to 20% of the fund for secondary investments in private companies that are scaling up and already have product market fit. Example, over the past 5 years, this would have been companies like Stripe, Airbnb, Flexport, etc. 7 years ago, I picked up my whole life and moved to Silicon Valley. I lived in an overpriced house with 6 roommates and hustled my way to build a network and learn what separates successful startups from failures. My dream with my all-access fund is to give someone thousands of miles away access to the same economic wealth opportunities that I've had. I look forward to making that a reality. Cheers, Sean. And then we have our Be an Adult section from AngelList. Investment details, $25.5K per subscription on a minimum of 4 subscription commit. So you're looking for $50K minimum investment with a standard 2% management fee, but we'll get to that in a second. 20% carry, and then AngelList charges either a 0.15% of contributed capital or a minimum $20K per quarter as platform fees. Now, Sean is charging a 2% fee. However, Sean's personal subscription per quarter will be with a quarterly cap of $20K in total. Sean will satisfy their GP commit in part by waiving 100% of management fees otherwise owed to them by the fund. So it sounds like Sean's saying that he will never commit more than $20K per quarter to the fund. That's fine. That's actually higher than the minimum that his LPs commit to. You'd be surprised how many AngelList GPs commit significantly less than the fund minimum. Sean will satisfy the GP commit in part by waiving 100% of management fees. Now, I'm guessing that he is, let's see, if he got 1.7 in commits on his first, on the launch of the fund, let's assume that was for the first quarter. Well, we can't really do that because we don't know if he set a quarter limit at that time. Hypothetically speaking, if he was doing 1.7 per quarter, his 2% of that would be 34K. So although it says he's waiving 100% of management fees, I think that's just poorly worded. And what he means is that he's going to waive up to 100%. However, once that quarterly cap of 20K is raised, then he will keep the excess on top of that. This is, again, the advantage of using the AngelList platform. You can perform cashless commits where you as the GP can fund your portion of your skin in the game through the money that your LPs have contributed to you, thus not making you any more cash poor at the launch of your fund. Now, everything down and below here is standard AngelList. I want to go through this and talk about a few details on his launch letter and also the quote of Sean. So it could be easy to make the mistake of looking at the launch memo that a GP has and assuming taking that as the whole picture of why their fund has raised money, but that would be very foolish. The reason that Sean raised $1.7 million for 4 days of launching his fund is because he has a huge podcast. His audience for My First Million, which he co-hosts, is very, very large. But more important than size is that it's the right audience. I would love to know when Jake Paul launched his anti-fund fund, which, by the way, is also on the AngelList platform. I did a breakdown on that yesterday, if you'd like to see. I'd love to know how quickly he got to say 1.7 million in commits, simply because Jake Paul's audience is much broader, it's much larger than Sean's, but Sean's is deeper, it's more targeted. Sean has the ear of founders and of VCs. That's why Jake went on My First Million podcast, Sean's podcast, to promote the launch of his fund. So there's this trade-off between the depth and the breadth, or the breadth and the depth of who you're soliciting investment from, what kind of audience you're building. If you're doing a rolling fund, that's going to be a 506c fund under Regulation D of SEC regulations, which means that you can only raise from accredited investors. You can market generally. However, you can only accept money from verified accredited investors, which skews you towards wanting to raise to wanting to cultivate an audience of depth rather than breadth. If you were raising, say, as Tai Lopez is raising under a Regulation A or Regulation CF offering, where you can raise money from unaccredited investors, that would probably benefit you more if you have that wide, broad audience. But accredited investors are a small subset of the population, tend to be more sophisticated with their money. That's why they're allowed the special privileges of being able to invest in private market deals. So I'd love to see that comparison between who raised faster, Jake or Sean, simply because Jake has the ultimate breadth audience, whereas Sean has such an incredible depth of audience. And going back to the note of Sean having the podcast, this fund letter here, this memo, this is just the tip of the iceberg, or rather, flip the iceberg upside down. This is the very bottom portion. This is the order page. Apply now to join the fund. I don't think that you're going to link this page, put it on a paid Facebook ad targeted to accredited investors who don't know Sean, and solicit investment. The reason why this works and why he raised money so quickly isn't because of any amazing salesmanship on this page per se. It's because of the strength of the network that he built before then, huge podcast, and also through his Twitter following with over 300K followers. This is just the very, very back end of the funnel of Sean. Now let's go through his landing page here. Our mission is to turn boat money into yacht money. Probably the greatest opening line in any rolling fund launch memo ever. He starts it with a joke, which is hilarious, just that he was so casual with something that was so serious. But he can do that because of the relationship he's cultivated with his audience. Think of it like a privilege of having already built the relationship. My goal with the fund is to quadruple or more our money over the next 10 years. There's some implication of a claim. The goal is to quadruple over the next 10 years. I'm not a lawyer, nor an accountant, nor a financial advisor, nor an investor. Do be aware whenever you are making any sort of anything that could be vaguely construed as a claim, like we are going to or we hope to quadruple money. But to his credit, he does sort of hedge it with over the next 10 years. That's a good trust building statement from the second paragraph of his launch memo. He's already letting you know that he's not promising any get rich quick. Okay, now here we're going into the fund, and as I've said before, when you have an amazing audience, you can generally get away with paring down sort of the offer of your fund to just your deal flow and your judgment. Sean does have a thesis, but for the most part, his proffer is just that he has better deal flow than almost anyone, and that he's shown a fairly good judgment in doing that. Contrast that with, say, Cody Sanchez's fund, where she has a very specific target avatar of companies that she's looking to invest in. A little more persuasive, just because it's a more tangible avatar and goal for her fund to reach out to. But in a sense, you could say that a Codie Sanchez would have to have more of a thesis because she didn't have the audience and the relationships of Sean. Although Codie's done very well for herself on the media circuit and promoting her own brand, even then, one, I'm guessing that her audience is smaller than the audience of My First Million, but two, her audience is less tech-specific. Sean is already in the sort of the heart of VC/founder Twitter. And the people that he's writing to have probably already cut checks before. They've worked with risky early stage startups before. And if you could control only one aspect of what it is that you're offering, whether you're selling products, services, or investment, probably the most important thing you want to control is the audience that you get to serve your offer to. And Sean has among the best audiences for selling investment, for soliciting investment in risky early stage startups. Now, this is interesting here. I mentioned that when you have a thesis, when you have the stronger the brand you have, the less of the thesis that you need because your name speaks for itself. And that when you have an extremely strong brand, then generally the pitch for your fund boils down to the essentials of I have great deal flow and I have great judgment/track record. Sean does something interesting here with building a honeypot for great founders. He's making a sort of a twist, a neologism on deal flow. You take someone's fund like Sahil's, where Sahil very plainly states that, boy, he works with startups all day long and he has access to a great network of startups. Sean sort of markets his access to deal flow here. He flips the frame by saying that he gives you a reason why his deal flow is so good, and that's that he has built a honeypot. Everyone else just knows founders, but I have founders attracted to me. Evaluate this through the same lens as the thesis itself. This is more colorful. This sticks in the mind a bit better. Hypothetically speaking, if you were reading two different fund launch memos side by side, you might remember this detail a little bit more of, oh, this guy has a honeypot. Investors are attracted to him rather than him simply knowing or milling about with other investors. And of course, the reason that Sean can say this is because it is true. He has a huge podcast. On that same note of making neologisms and making the ordinary sound a little more extraordinary, notice how he phrases this paragraph here. One of the four ways in which he attracts founders is that he has a, quote, underground society of founders. For 7 years, I've hosted mastermind meetings with founders in SF. This is how I became friends with founders such as blah, 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 blah. Now, Sean's talked about this on the podcast before, that at least when he was early in Silicon Valley, one of the strategies he would use to network is with almost no credibility at all, just announcing these mastermind dinners and telling these different founders and investors that you should come to this dinner because these other founder and investors will be there. And he made some connections doing that. I don't actually know that he continuously does any sort of, quote, mastermind meetings, aside from simply knowing people in San Francisco and going out to dinner, etc. But when you phrase it like underground society of founder mastermindings, that makes it sound like there's a more official structure there. And it sounds quite a bit more, one, interesting, but two, more concrete and real and authoritative than if Sean simply said, oh, well, I live in San Francisco and, maybe twice a week, me and the wife go out and have dinner, and it's usually with different founders and investors that we know. Okay, now we're talking about a flex. Look at this podcast. I have a startup podcast that does over 2 million downloads per year. It's number 55 on the iTunes charts. Fantastic flex that he doesn't feel the need to even say what the name of his podcast is. It's not terribly good promotion. You should say that to alleviate any doubt about who you are, but it's just hilarious and ballsy that he seemingly intentionally chose to not drop the name of his podcast. Now, here's something I want to talk about. At this time, I'm at 55 on the iTunes charts. Now, I assume that when he wrote this memo and launched fund, that was true. Nowadays, we can see, and this is up to date as of about 2 years after launching his fund, he's 26 on the charts. Very well, doing better, which brings me to a question. Is there an option inside the AngelList platform to make dynamic pages? I've seen several times where GPs list different accomplishments or details about themselves in their AngelList launch page, and it gets out of date. And the fund is still raising, so you want to keep that information as up-to-date and new, fresh as possible, and let people know exactly how great things are going now. It would be better for a potential LP to know that Sean is 26 on the charts, not 55 now. Could you plug this into a Notion dashboard or something like that? I think it would be interesting if there could be a dynamic way of rendering information like what the success of different investments that you've had, or how your podcast is doing on the charts, just to keep things up to date, because Sean probably doesn't spend any time thinking about this page. And he probably doesn't have any occasion to update itself. This is an interesting detail here. Under track record, he mentions that he specializes in, quote, international growth and funding. International growth. That could be a interesting bullet in and of itself. I haven't read any other rolling fund launch memos where a GP mentions that he has a specialty in understanding international growth. That could be a great selling point to a fund. I know how to invest in companies that are worldwide rather than just being big American successes or big European successes. You could brand yourself as the international growth investor. I'd like to hear more about that. Now, speaking of keeping information up to date, we're into Sean's track record here. Lambda School, for example, when Sean wrote this, Lambda School recently raised money at a $150 million valuation. Let's see how current that is. Lambda School, which is now called Bloom Tech Institute, raise valuation 2022. So let's see if, okay, no, that's not it. Bloom Tech valuation. Okay, here's something from 2022 from TechCrunch. It was 3 months ago. Is that the right one? Might be a different Bloom. No, sadly, different Bloom. 1 second here, guys. Bloom Tech. Hmm, 2018. Anyways, I'm not going to spend any more time looking for the specific, but let's hypothetically the school had done another round since the publishing of this page, and let's say their valuation had reached $1 billion at that point. That would be a good thing to get out there. It would be nice to have some sort of dynamic page where you, as the GP, could just update a spreadsheet or have someone who works for you update a spreadsheet, and that would update some of the numbers in your page automatically. He ties up his fund launch page on an emotional paragraph. 7 years ago, I began this journey. I sold everything I had. I moved to Silicon Valley. I really lived that life, and now I want to be able to give that back. That's a hallmark of storytelling and of writing a sales letter. Is at the end, generally speaking, when you're writing some sort of sales promotion, you're starting with the very attention-grabbing, emotional stuff. And then as you've hooked attention, then you can move into the more logical, technical offer details. But then at the close, you want to hook back into the emotions and tie it up, finish it off with that emotional pull that ultimately will be the reason why your LP invests or not. Well, that was an overview of Sean's All Access Fund. It's doing very well because Sean has a tremendous audience. And if you are a founder who wants to make the transition to being a funder, probably the best investment that you could make, the best little step you could do each day is accumulate an audience somewhere on tech/VC/Twitter /Silicon Valley Twitter. It's not about the breadth of your audience, not about the size, it's about the depth and getting the right people who are already accredited, who are already used to cutting checks to risky startup investment. Guys, thank you for watching. This has been another episode of Fund Launch Live, the daily live stream for all things rolling funds, syndicates, and other publicly solicitable forms of equity raising.